Chasing corporate high flyers could be paying off for Virgin. Boss John Borghetti says his strategy of targeting the premium government and business markets has been vindicated by the airline's return to the black. Although the profit of $23 million is small, it's a turnaround of more than $90 million. And in a shot at rival Qantas, Virgin says its international division is also making money. Andrew Robertson reports.
Under John Borghetti, Virgin Australia has given up being a no-frills airline and is now getting 20% of its revenue from business and government.
We're over the tipping point. This is now the new norm. This is now the new competitive landscape in this country.
Revenue was up 20% to just under $4 billion. Sales from high-yield fares such as business class and premium economy more than doubled, which was a major contributor to the full-year profit of $23 million. Airline industry analyst Peter Harbison thinks it's a good result.
There's been a very good turnaround in profitability compared with last year, in what has not been a particularly easy year, and a year when they've been making quite a lot of transitions as well. But yeah, I think to the extent that John Borghetti's been pushing the whole concept of getting into the corporate market, they seem to have achieved that very effectively. That's, I would think, the standout, yeah.
Virgin now sees its main competitor as Qantas rather than Jetstar or Tiger, and to keep the momentum going, it's planning a major efficiency drive, which it's hoping will deliver $400 million in productivity gains.
We have a cost advantage now, but more importantly, with these productivity enhancements that we're putting in place and the young age of the fleet itself, will continue to maintain the cost advantage going into the future.
While Qantas is being dragged into the red by heavy losses in its international division, Virgin was keen to point out that pre-tax earnings in its international airline were up 58%. The rise in profits is being driven by alliances it's formed with other carriers such as Etihad, Air New Zealand, Singapore Airlines and Delta.
The really, really interesting contrast between Qantas International and Virgin International is that Virgin, to a very large extent, is a virtual international airline, and that really is the model that a carrier in the position where we are geographically in Australia needs to be.
Despite Virgin's profit turnaround, it refused to pay a dividend or offer guidance for this year. The market responded to that by marking its shares down 4%. However, over the last 12 months, they're still up 64%.